a commentary on the trade that I took today using the 5 minute time frame as an entry. And this trade was on Great British Pound US dollar. This is prior to the trade being taken at 10:17 in the morning. As you can see, it's retracing downwards. But we're expecting it to go up. And I took another screenshot afterwards at 10 in the evening. And yeah, the trade panned out beautifully. We're looking to get 1 to 5 risk reward, and the market offered that to us beautifully. All right, let's do the actual analysis on this then. Yeah, so on the daily time frame, you can see we are making series of lower highs and lower lows here. We made a low and then we made a high, higher than this one, so we call this a high. And since 7th February, we've been consolidating until around 7th of March. We drag back down and we go up. This shows us bullishness. So could this mean we are making an impulse? Maybe. It could mean that, or it could just mean we're retracing to go lower. We're not really sure yet. That's all the daily time frame tells us now. All right, let's go down to the 4 hours. The 4 hours is clearly bearish. Yeah, so the market was making high highs, high lows, and then from this point onwards, start making lower lows and lower highs. We made this most recent lower low, and then we impulsed upwards and made a high high. We took the trade around somewhere here. So this whole price action came afterwards. And why do we call this a lower low? Also because we've went below this low here, higher low, and made lower low. Okay, let's go down to the 15 minute. The 15 minute, from this point onwards, market is clearly bullish, and prior to that we were just consolidating, or some could say we were like bearish. This is clearly bearish because new lows get created and the market respects the lower highs. It doesn't go above these lower highs, so the market's creating lower highs and lower lows. And from this point onwards, we've broken above this high. So this is our break of structure. From that point onwards, that's our break of structure. And here we made a high, high, low, high, 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 low, and we made a high, high. But remember, we took the trade from here, so we wouldn't have known, say, a high high was going to get created. But we're expecting the market to create a high high because we've made a series of high highs and high lows. So wait for this retracement to happen, and then we were looking to enter the trade from the lower time frames here. So the structure is clearly bullish, and we're just going with the trend. There's no point about looking for sells around here because the market is clearly bullish, as you can see. So we only look for buys. And also, the 4 hour time frame, we made a new high, or we broke above this high over here. So we're only looking for buys. There's no point looking for sells because the sales happened here. On these lower highs, you could have been selling. And as long as the market didn't go above this high, you could be selling, but the market went above this high. And yeah, this provided the opportunity to take the market up. All right, let's go to the 5 minute and see the price action on the 5 minutes. All right, the 5 minute is bullish, but as we made this high, we start making some bearish movement downwards, which we took out this low and made a lower low, and this can be considered a lower low in contrast to here, but it is on the higher time frames. On the 15-minute, this is a higher low. You have to remember, because it didn't go below this higher low. It didn't go below here, so we consider this as a higher low. And then what the market did was we made a higher low. This lower high, we took over that high. We went above it and created a higher high. We'd retrace back down, and we were anticipating a higher low to get created. See, at this point, when the market broke this high, we should be considering this as a higher high, most likely, because this whole bearish price action is finished. So you should be expecting a higher high to happen there. And then this is after the trade. We made higher highs, higher lows, higher lows, higher highs. That's after the trade. So the trade was taken over here, where we created some sort of retracement downwards, and then went above and created a higher high. We go to 1 minute. The same thing happened on the 1 minute. You can see over here we made this high, and then these can be considered higher highs, higher lows. So the market became bullish from this point onwards. From this point onwards, the market became bullish. You get higher high, higher low, higher high, higher low, higher high, higher low. So what that means is the market starts breaking structure on the lower time frames first, and then the higher time frames such as the 5-minute, the 15-minute follow it. So if the market is bearish on the daily time frame, you could be getting some bullish movements on the lower time frames, or breaks of structures on the lower time frames, but that doesn't really mean the market has switched structure on the daily time frame. It just means the lower time frames are playing in contrary to the higher time frames. So we came back down to this level. We can use the Fibonacci from there, and as you can see, came down to 50%. We took that trade. And also support turn resistance. This is our resistance turns support. As you can see, the market just comes down to that level and moves away from it aggressively. And yeah, so that's all then. I'm gonna post more like commentaries, so please, you can go to the Discord and check out any announcements I make throughout the week. But for this week, I've reached my target. So yeah, I'm not going to be doing any more trades this week because I already reached 1 to 5, and yeah, there's no point.